Hey guys, welcome to the channel. I'm Sheen, your host. This is Money Matters. In this channel, we talk about money, finance, how to grow your money, how to invest your money, how to make money work hard for you. If you like what I'm doing, consider subscribing. I show you my portfolio on my other videos. I'm transparent about all my trades, about my buys, my sells. So if you are interested in seeing somebody, buy and sell, run his portfolio, consider subscribing. Again, I'm really transparent with my public portfolio. Check out my other videos where I, expose my entire portfolio. So if you're interested in that type of content, if you're interested in watching somebody's video that is completely transparent with you, give me that thumbs up, subscribe to my channel. I have over 500 subscribers now, and I thank each and every one of you. Really humbled that there's people out there watching my content and find some value. All right, guys, let's get started. So today we're going to talk about Plug Power. I got a few requests to cover this stock, so here we go. Thank you for suggesting this. So here it is, Plug Power. So today, our close of Thursday, market close July 2nd, 2020. They were trading for $9.10. So this is a company that has been pretty much caught up in this whole EV trend, EV bubble, if you will. I don't know if it's going to be a true bubble or not, but definitely the EV market is on fire. Companies like, Tesla is leading the pack, bringing EV to the mainstream. Everybody's really excited about alternative fuel and cleaner vehicles. So Plug Power is definitely getting caught up in that. Companies like Nikola, Hyllion, Workhorse, Archimoto, Plug Power, Blink. So all these companies are wrapping up this EV market, this EV trend. And so Plug Power is one that's getting a lot of attention. So their 52-week high is $9.65. 52-week low is $1.88. So definitely a huge run up compared to the 52-week low. On Robinhood, there's 381,000 people holding this stock. So definitely a lot of people holding it. But one thing I will say is I've heard that this stock was one of the stocks that Robinhood gives out for free. So that just consider that that's probably why a lot of people are holding it. So just keep that in mind. A lot of people are probably holding it because they got it for free. But anyways, over close to 400,000 people on Robinhood are holding this. So let's talk about their numbers. Income statement. So this is the first red flag for me personally. So again, not financial advice, just me expressing and sharing my opinion. So their total revenue, and it has gone up, year over year. Not too impressive. 132 million in 2017, and then up to 230 million in 2019. Trailing 12 months, roughly 250 million. So an increase year over year, not too bad. But their net income, it seems like they're burning through money. Their net income is negative 127 in 2017, negative 85 million in 2019, and the trailing 12 months is negative close to 92 million. So they're not bringing in money. And so, this company's gotten caught up in all this EV hype, but this company has been around since 1997. The current CEO, Andy Marsh, has been with the company since I think 2008. So this is not a startup company, not one of these brand new companies that has just jumped into the marketplace and has a lot of hopes for the future and things like that, a lot of hype around them. They've been around for a long time. And so for me, if I'm seeing a company that's been around since 97 and they're not posting profits, that's one thing that I'm going to be looking at and a little bit concerned about. I want a company if they've been around this long, to be posting some profits. That doesn't mean that moving into the future they're not going to be successful. They're not going to post a profit. For all I know, they could skyrocket and be profitable next year and then super profitable with this whole EV trend, this whole transition. In the past couple of years, this trend has been building, so it is really possible that they become profitable really soon. With their acquisitions that they've been doing and with this hype that's building. So it is completely possible. The past does not dictate the future, but still, as an investor, you're going to look at the past, you're going to look at their history, and for me, that just is a little red flag. Is they've been around for a while. Why are they not posting profits? So next thing, let's look at their balance sheet. How much money do they have? So not too bad of a balance sheet actually. So current total assets, 313 million, and total current liabilities 150 million. so nearly double. So that is pretty good. I like to see that. So that's a plus for them. So what do they do? So Plug Power, basically they are a hydrogen fuel cell company. Some of their products include this thing. It is basically a hydrogen generator, generating electricity. So their market is really niche. They're not, mass production to the consumer. Not everyone needs a hydrogen fuel cell generator, right? Also, their products are things like this, forklifts and heavy equipment for moving things around in a factory, basically. So again, not mass market. Not everyone needs this. Not super commercialized. Very niche market. So that's the other thing that I will say is they're not production for the masses. And so for me, if I want to invest in a company that's going to be mass producing to millions and millions, if not billions of customers. So not that they can't be super successful. Obviously they can, producing in a niche market. So one thing I will say, it does make sense the market that they're in. They produce these equipment for forklifts and such, and it makes sense because you're not going to use gasoline in a factory for your forklifts, right? All these forklifts are electric. You're either going to use a battery version or you're going to use a hydrogen fuel cell version. So it makes a lot of sense in that specific niche because a battery it takes probably, I don't know, just taking a guess here, 10-15 hours to charge a battery for a forklift. And so even if the battery is interchangeable, which I don't think they are, but it takes a while to charge that battery. And so it just makes economical sense to have a hydrogen fuel cell that you could just put hydrogen in it and it could run for a full day shift, and then just basically fill it up with hydrogen, or just swap out the fuel cell with another hydrogen fuel cell and you're good to go. So in that specific niche, hydrogen does definitely make sense. But my only concern is the battery technology has come a long way. Teslas can charge in 20-30 minutes now on a level 3 supercharger with the latest hardware version. So driving down the cost and the charge of these batteries, battery technology has just come a long way. So maybe in the next 2 to 3 years, maybe 5 years out, these forklifts could be running on battery electric that can be charged in less than 20 minutes. And then so that just completely wipes out the need for this hydrogen fuel cell. Hydrogen is more volatile, so it could wipe out the need for it. So that's another concern that I would have is just the evolution of the lithium ion battery. So that's another concern I have. The last concern I have is just hydrogen in general, not specifically this company, just hydrogen in general as a fuel source. So hydrogen is good, it's clean, it's plentiful, it's basically unlimited. And if hydrogen was being produced and being mass researched into 10 years ago, 15 years ago, today we probably have really super cheap hydrogen. We probably have infrastructure built out, and I'll be super bullish on hydrogen because again, it's plentiful, it's basically unlimited, it's clean. The exhaust from hydrogen, the exhaust is just basically water, and in that it's actually clean water. It just needs to be filtered and you could drink that water. So it makes a lot of sense, but it takes a lot of energy. It takes a lot of energy to produce hydrogen. Basically they produce hydrogen by extracting it out of water through electrolysis. And so, hydrogen is very unstable. It doesn't like to remain. So going back to basic chemistry, hydrogen does not like to remain hydrogen. It's going to bond and most likely just become water, right? H2O. So it takes a lot of energy to break that bond to extract just the pure hydrogen out of it. And so that's another thing is it takes a lot of energy and therefore a lot of money to produce the hydrogen. So and that shows in the cost of hydrogen. So here's a chart of cost of hydrogen per kilogram. So it's roughly $15 to $16 on average for 1 kilogram, which is 1 kilogram is equivalent to 1 gallon. So average is $16.21 for a kilogram of hydrogen. And so compare that to a gallon of gasoline currently. Where I'm at, a gallon of gasoline is like $1.60 some cents. So it's a hard sell for someone to get into hydrogen if the fuel is $16 a kilogram when I could buy gasoline for $1.60. And so the reason for that is, like I said, number one, it takes a lot of energy, therefore a lot of labor and a lot of money to produce hydrogen. So here, take a look at this chart. Look on top. This is comparing basically battery EV vehicle on top with a hydrogen vehicle through the whole life cycle of the fuel. So on top, basically if you have an electric car, wherever you're getting this energy from, whether it's whether it's fossil fuel to create the electricity, or it's wind energy, green energy, whatever, it doesn't matter. 100% of that you're getting transported through basically electrical wires, high tension wires. So you're losing a little bit of efficiency when it gets transported through the wires. And then it gets to your house, gets to your vehicle, you charge your vehicle, that electricity goes into your battery. And then when you discharge that battery into your e-engine, into your electric motor, you're losing roughly 10 to 20%. So you're getting about, maybe close to 30% you're losing. So you're getting 70 to 90% efficiency. Comparing this to hydrogen on the bottom, so again, you're getting 100% energy wherever you're getting it from. And you have to extract this hydrogen, and you do it through extracting it from water through electrolysis. So you're losing efficiency right there. And then you have to compress and liquefy this hydrogen. So again, you're going to lose some efficiency there. Then you have to transport it, and you're not transporting it through, the speed of light through high tension wire. You're transporting it probably in a truck, in a vehicle, to the fueling station. So you're losing efficiency there. Then it goes into a fuel cell, and then that goes into your battery, your electric battery. So the fuel cell, takes the hydrogen, basically generates electricity to fill up your electricity, your capacitor or your battery in your hydrogen vehicle. And then when you discharge it into your engine, into your e-engine, you're getting roughly 25 to 35% efficiency from the whole picture. So you see right there, hydrogen is just not very efficient. So you can argue that these processes can be improved upon, costs can be driven down, and yes, that's absolutely correct. But I would say, like, by the time you get hydrogen to be cost effective, by the time this is all worked out, the technology is worked out, where is battery technology going to be? Battery technology already currently, Tesla is pushing 400, 500 miles on their current vehicles. I think 400 miles on their Model S now. With their new vehicles coming out, like the Cybertruck, pushing 500 miles. So by the time hydrogen gets to a price point where it makes sense, battery lithium-ion technology is going to be in the next 10 stages ahead of hydrogen. So by that time, it's not going to even be feasible to even consider hydrogen unless it's a niche market like Plug Power is doing. And so, like I said, the infrastructure for hydrogen is just not there. Basically, here is a map, and it just basically there's only hydrogen fueling stations in California, probably just like a few in the East Coast, a few in Canada. So the infrastructure is not there. And so that's my third point, is just not that I don't believe in hydrogen. I do believe in hydrogen. It's a good idea. It's a good concept. It's clean, but maybe if 10 years ago this was started, the cost would be driven down by now. But as of today, the battery lithium-ion technology is the one that has been showing promise, is being promising, and so obviously the cost of the lithium-ion battery has been driven down, and so now when you're comparing the two, it's no longer comparable. So that's my third point. So Plug Power deals in basically the hydrogen market. They make these niche products for factories, for forklifts and generators, and they produce the hydrogen as well. So overall, number one, they're produced for a niche market. It's not mass market. Number two, the hydrogen it's not cost effective, and there's no infrastructure for it. So that's my thoughts about Plug Power. Not very bullish on it. Now, will it do good? It could very well do good, with everything in the EV space doing really good. So I'm not saying the stock is going to go down. I'm not saying the stock is going to crash. I'm not saying it's not a good buy. I'm just saying in the long run, I believe in battery electric lithium-ion power, and so a hydrogen company, it just doesn't excite me. So that's my thoughts about Plug Power, guys. Let me know your thoughts, and let me know if you agree. Let me know if you disagree. Consider subscribing if you found any value in my video. Give me a thumbs up, really helps out the channel. Catch you in the next one. Peace.